up, guys? Joe Laney, Realty One Group.
Jason Smith, Nova Home Loans.
Today we're here to talk to you about kind of some things that are changing in the market. So if you're a struggling buyer, we've got some good news for you.
And that's for buyers buying primary residences. So on your conventional loans for your second homes and your investment properties, there's been quite a bump in the interest rates. And that's because on that agency side of things, they're trying to control the amount of homes that are being bought as second homes or investment properties. So what does that mean? The ROI, the rate of return for these investors may not be as good. So they're going to start pulling back potentially on buying these properties. Yeah, now there are going to be cash offers you may compete against from time to time, but you're going to see that the market isn't going to be as saturated with investors because a lot of investors were using loans because the rates were so cheap, even because they don't have the capital, and some people just don't want to part with that much capital to pay cash for a property. So for you buyers, what does that mean, Joe?
So the good thing is that means a little less competition, a little less crazy, a little less overage, over ask. And on that same theme, now that COVID has kind of died down, and if you're looking at the infection charts, they're dropping off a cliff. So we've pretty much, it looks like we've reached herd immunity. So basically, we're going to start getting those sellers that have been sitting on the fence starting to trickle out their houses on the market because it's such a great time to sell.
But that also means for you guys that are thinking about selling, if you want to get people in a competitive situation to buy your property, now's the time before more of those listings come out. We're talking people are getting $10, $20, $30, $40,000 over appraised value for their homes. That's a lot of money to put down on your new property or pay off debt.
In Scottsdale, I'm experiencing right now actually like 50 to 100 depending on the house and whether it's good for, say, Airbnb,
Cue the dollar signs,
stuff like that. So yeah, I mean that 20 to 40 is in I would say the more average, but in a lot of areas, I mean there's even more, 50 to 100. So for a seller right now, before that inventory trickles out, he's absolutely right. Why not get that extra bonus of the people that are paying higher? Because there's nothing available right now.
But also we're getting a slight reprieve on rates. We're trickling back down to the low threes. I've even getting people back in the twos in some situations. This won't last long because inflation is taking effect. Rates are waves. But unfortunately, we're on that wave that's kind of gently going up, even though it goes up and down once in a while. So the thing is, if you hold out longer, it could be longer to sell your home versus in this competitive market, but also the rates are going to be higher, which is going to cost you way more money versus just waiting long. You know what I mean? Basically, you don't want to do that. It's going to cost you way more money to wait because you want to time the market perfect. Yeah, you might sell your house in a year at the very top, but you're going to get a higher rate on that new house. So you're going to lose everything you gained and more.
And for buyers right now, if you wait for that inventory to trickle out, prices are still going to go up because there's still a lot higher demand than supply. So now is the time to start getting into the fight and getting you the right property.
Yeah, if I was going to do it, I'd do it right now.
Yep. All right, guys, hit us up if you have any questions.